The Fed, in my opinion, hasn't done a thing right since Paul Volcker, who was brilliant. All of the others have encouraged a chain series of really dangerous asset bubbles. They rattle the economy. They're incredibly disruptive. The decline in 2000, 82% in the NASDAQ was the decline from 2000. The decline of the housing market, all the way back to trend and below, dragging the world with it, and all of the problems from bad mortgages and a percent decline in the S&P. These have a terrible wealth effect. They make people feel poor, and they make people spend less. It's the last thing you want, and yet they have not learned. They overstimulated to get to 2000. They overstimulated in the housing market. They got 3 or 4% more people to own houses in 2007 than had ever owned houses before, and the consequences were dire. And have they learned? Absolutely not. So in this time, they step into COVID, and of course you needed to stimulate. But did you need to throw this much money all over the world so that it flows into the stock market and creates these meme stocks?
So this is a complicated question. The question is, why did they delay that? I think that, why did they delay their response? I think in retrospect, yes, it was a mistake, and I think they agree it was a mistake. There were a number of reasons for it. One of the reasons was that they wanted not to shock the market. They wanted to avoid, Jay Powell was on my board during the taper tantrum in 2013, which was a very unpleasant experience. He wanted to avoid that kind of thing by giving people as much warning as possible. Right. And so that gradualism was one of several reasons why the Fed didn't respond more quickly to the inflationary pressure in the middle of 2021. There were other reasons as well.
What do you think?
Well, one of them was that in early 2021, after the American Rescue Plan was passed, and this was something like $2.8 trillion in new federal spending between the American Rescue Plan and the December program, the Fed could have responded at that point, but they looked around and said, well, look, there's still a lot of slack because the unemployment rate was still close to 6%. The number of people working was still well below where it was before the pandemic. And so they said that, well, there's still a lot of slack in the economy. We should let this fiscal program do its job and bring the economy back to full employment. What we've learned since then is that because of the pandemic, with a lot of people staying home, that the unemployment rate, for example, the number of jobs may not be a really good indicator of whether the labor market is hot or not. And so they're looking now at things like the number of job vacancies, which show that employers are having a terrible time finding enough workers and that the labor market is distorted. The other issue that they were looking at was the supply chain issue. The pandemic has snarled supply chains around the world. That has helped drive up prices. The Fed believed in the middle of 2021 that these factors would likely solve themselves over time. That, in other words, that the supply shocks were, quote, transitory, and so that they didn't need to respond to the early stages of inflation because it was going to go away by itself. That proved wrong. So there were a couple of issues, I think, that are related primarily to the pandemic itself and the way that it scrambled the usual indicators that made it harder for the Fed to read the economy.
The Fed is going to have to raise rates and reverse QE. And they're going to, if they can, they're going to try to slow down the economy enough so that 8% starts to come down over time. And I wish them the best. We're a little late, but remember 2 years ago we had 15% unemployment and no vaccine. So I think people should take a deep breath, give them a chance, and I think they got to move. I think the sooner they move, the better. So yeah, they're going to be raising rates. Yes, they can engineer a soft landing, 1/3% chance. Probably 1/3% chance they can engineer a mild recession. Think of, we've had mild Fed-induced recessions before, where inflation goes up 1.5% or 2%, everything slows down, inflation's coming down, and it's 6 or 9 months. And then there's a chance it's going to be much harder than that. And then in the face of all of that, you have Ukraine, which is a huge global issue. And I'm not afraid of the Fed. I'll change the subject a little bit. I think America needs very good domestic policy to improve the growth of the economy, which makes the Fed job easier. And that is about regulations and rules and policies and improving projects and things like that. So you have, increase the supply side as opposed to, do some of the demand side. So the Fed's job would be easier if we had very rational, thoughtful economic policy.
Well, look, I think I was wrong then about the path that inflation would take. As I mentioned, there have been unanticipated and large shocks to the economy that have boosted energy and food prices and supply bottlenecks that have affected our economy badly that I at the time didn't fully understand. But we recognize that now. The Federal Reserve is taking the steps that it needs to take. It's up to them to decide what to do. And for our part, President Biden is focused on supplementing what the Fed does with actions we can take to lower the costs that Americans face for important expenditures they have in their budgets. Prescription drugs is one example. Healthcare costs, another example. Utility bills. If Congress is willing to pass some of the proposals to boost the use of non-renewables, I think that can serve to bring down an important cost that households face. He realizes, we all realize, what an important and huge burden inflation is placing. Chair Powell has made clear that he has every intention and believes, as I would, that the Fed has the tools to bring inflation down, and that's his focus. The Fed has a dual mandate. The economy is, I think it's fair to say, operating at full employment with the strongest job market in generations. Inflation's too high, and it's got to be brought down. Well, core inflation has come down. It's still too high, but in recent reports, we've seen it move down, and that's an encouraging sign. But oil prices are high. Russia continues to wage war against Ukraine. We're trying, and the Europeans are trying to address that and limit his ability to wage this war. There can be impacts on energy and food prices that, we can do everything we can domestically to control. The president has authorized historic releases of oil from the Strategic Petroleum Reserve, but we can't rule out further shocks.